First, let's start by defining both cyclical stocks and defensive stocks. Cyclical stocks are stocks that are highly sensitive to economic cycles. When the economy is doing well, cyclical stocks typically perform better than the market. But when the economy is doing poorly, cyclical stocks typically perform worse than the market. Examples of cyclical companies would be restaurants, car manufacturers, real estate companies. This is logical if you think it through, because if the economy is booming, you're likely to go out to eat more or buy a new car or buy a new house. But if the economy does poorly, people generally hold off on new cars or houses, or eat out at restaurants less often. And the profits of these cyclical companies are vulnerable to these economic cycles. Some examples of cyclical companies are companies like General Motors, McDonald's, and the Pulte Group. Defensive stocks, on the other hand, are companies that are not as sensitive to economic cycles. When the economy is doing very well, defensive stocks are likely to underperform the market, but when the economy is struggling, defensive stocks will generally outperform the market. Examples of defensive companies would be healthcare, utilities, and food and beverage producers. Once again, there's logic behind this. When the economy is struggling, you are likely to keep buying cereal, go to the doctors, and pay for your gas or electric. This logic also holds true when the economy is doing well. Just because the economy is doing well, and perhaps you got a raise at work, you are unlikely to go to the doctors more often or buy more cereal or milk. The result is the profit of defensive companies end up with much more consistent earnings, rarely having huge surprises either on the upside or the downside. Many defensive companies are consistent dividend payers. Some examples of defensive companies are companies like Kraft Heinz Company, Johnson & Johnson, or American Electric Power. At the end of the day, both cyclical stocks, which move more dramatically than the market, and defensive stocks, which tend to be more consistent performers and have less volatility than the market, have a place in most investors' portfolios. If you have any questions about the world of investing, any suggestions on videos, please post in the comments below, and please subscribe as we continue to update with new videos every week. Thank you.